Good evening, everyone, and welcome to TradeFinder Live for the 29th of August, 2023. You'll notice a slightly different accent today. My name's John. I'm part of the team here at Elliott Wave Options and standing in for Zach, who is sitting his way through the storm in Florida. His internet is pretty shaky up and down, so I'm standing in for him so that we don't get any interruptions. And obviously, before we move on to the main attraction, just a little bit of housekeeping as we do each week. On the screen at the moment, you will see our disclosure agreement. And the main point to take away, and you're obviously familiar with this if you watch TradeFinder each week, the main point to take away is that Elliott Wave Options is not a registered investment advisor in the United States. And so any of the information that we're discussing this evening on this presentation should be taken as educational. With that said, let's move ahead, and joining us as he does each and every week, let's bring in Rob Roy.
Hey, John, how are you this evening?
Very well, thanks, Rob. How are you?
Doing well, thanks. Hopefully everybody can see the screen there. And yes, you can tell by the background up in the mountains, and wasn't necessarily to get away from the hurricane, but kind of worked out that way, get away from that oppressive heat that we've had. And with the temperature in the Gulf, pretty concerned about what could happen with this storm once it makes landfall. Hopefully everyone will help me in wishing our friends in Florida safety and hopefully minimal damage as we go through what I think is going to be a pretty major storm by the time it hits the coast. But yeah, over where Zach is more in the northeast quadrant, which anyone knows is the toughest part of the storm. So anyway, thoughts to all my friends in Florida. So as we take a look at the markets, we did have a big update today in the market, looking at the volume, because you always want to see the volume when you have a bit of a reversal like's been going on. Pretty average volume. So you have to put some respect into that. Yesterday's little bounce on minuscule volume basically meant nothing, and so we wanted to see what was going to happen today. So the fact that we took out this high back from the 24th of August and we did it on decent volume, you have to respect the fact that this could have some legs and continue higher. So what happened? What caused this movement? What caused the change basically in the atmosphere, if you will, in the market? And the reason that the talking heads would tell you it was the JOLTs report, which is job openings. And without boring you with a whole bunch of statistics, in general terms, basically when you have wage inflation, which is one of the things that the Federal Reserve has said they're very concerned about, the jobs market, they want to kind of weaken the jobs market without destroying the jobs market. So they want to take away the wage inflation without killing employment. And the number today led people to believe that they're kind of massaging that sweet spot, if you will, where people aren't moving jobs. And normally when you leave one job and go to another one, you're going because you're getting an increase in salary, right? So that's wage inflation, where there's so few qualified workers for lots of jobs. And so they have to pay those people that are available more money. So that was the excuse that was given. Maybe that had something to do with it. I'm not sure. I'm going to come back to the chart of the S&P in a minute, but I just feel like when we're talking about what happened today, this is really the culprit or the catalyst, however you look at it, with interest rates moving back. Here's the TNX, the 10-year, and you can see rates, big drop down. So they pull back a little bit, but they pull back from a fairly vertical move. You know what I always say about vertical moves. So we had backed off a little bit, and then now big move today to the downside. That helped all the tech stocks. We'll get into NVIDIA later. Big move, closing high on NVIDIA today. So Zach, if you're able to listen, I'm sure you got a smile on your face. But they did a deal with Google. So now we have the two big AI kings working in concert together. So that gave that a big move, and it probably would have been up anyway, but maybe not as significantly if we didn't have the help from the rates. So we had kind of a perfect storm of things occur today for an upward day in the market, because when we take a look at the dollar, it came down too. So the things that have been causing issues, causing concerns about the economy going forward, pretty significant moves back in the opposite direction today. And that is what gave the market fuel. So pick your poison, whichever one you feel. I think it just was, as I said, a perfect storm. Just a conglomeration of things occurred, and we had an up day in the market. So now we want to know, is there going to be some continuation to this? We had broken below the 50-day moving average, came back up, tested the 10-day. It was a failed test, broke back down, tested it again. Get a little bit above it yesterday, but again, I don't think you can count that because the volume was so weak. Resounding break of all the major moving averages to the upside today on average volume. Now we have a little bit of resistance here at 450. It's not significant, but there's a little bit there. We're a tiny bit overbought, but again, not significantly so. Closing at the high of the day. So could we get some follow through? We could. Are we heading back to fill this gap? That's a distinct possibility if we get follow through to the upside here. So lots of things to look for tomorrow, but you know, the main thing to watch is do we get any follow through with a close above 450? Wouldn't surprise me if we backed off a little bit, even without a significant move back, just because we're a tiny bit overbought. And then we'll relook and see if we get some follow through on a break above 450. But we could just power higher again from here if it wants to, because it's just not quite that overbought yet. And on top of that, it was just good, solid average volume. If we had had this move today with one of those big old massive spikes in volume, I would say, you know, we're probably going to pull back a little bit from the 450 level, because when you have those big massive spikes, everybody that wants to buy bought, and then you have a lull in buyers for a period of time, you get a little bit of a pullback. We don't have that scenario with the fact that we're just on average volume. So we'll see how nervous the shorts are in tomorrow's trade. Clearly, there was a little bit of short covering, but we had had more volume than that if the short covering was significant. So far, the shorts aren't nervous, but we'll see how that continues. Looking at the DMI, you can see that we did have a positive cross there, the positive directional indicator moving to the upside, the negative still moving down though. So the buyers in control and the sellers have weakened, but it's not that significant yet. But if it continues that separation, that would be something to take note of with a change in the ADX. So remember, the ADX is a little bit more of a lagging indicator, but you could go back and say, you know, you could make a case that this was a pivot point low here on the 18th of August, and we've kind of had a move off that level, and there's been no response from the ADX whatsoever to this move. So when you take it from there, it's a stronger move, or a larger move, not necessarily stronger, but larger, with no credence being given into it from the ADX whatsoever. So we're going to need that ADX to turn up if this is going to continue, if the wave 4 is indeed done. So call it the 38.2% fib level. That counts. We could move up towards that wave 5 target from here. Just call this a test of the 50-day moving average and move back to the upside. But it's not like all the things that the market's been concerned about are all of a sudden okay just because we had one jobs report. We've got like 3 or 4 more jobs related reports to come out the rest of this week. And if they're not showing, you know, this weakness that the JOLTs report showed, all this could get turned around in a heartbeat. So still, you know, not the all clear we're done with the correction. We're ready to move to the upside. Give the day its credence because it had a lot of things in its favor. If we can continue to see interest rates come down, if we can continue to see the dollar back off a little bit, you can see it kind of came up and hit this area here around 104. Perhaps we can see the metals take off again. We'll look at SLV, I'm sure, before the night is over, and we'll see if we can finally get we had that one bounce and then consolidation, but this could definitely spur the silvers or the metals, including SLV, back to the upside. So pretty interesting day all in all. And as I said, kind of a perfect storm for the markets. Taking a look at the rest of the indices here in the US, the DIA came down to that 340 level and bounced off of it. And we had this wave 5 that didn't make it to 100%. So we were looking for the DIA to move back down to this previous wave 4. As you can see, it didn't get there yet. That still needs to happen unless we're going to move up here and take out this wave 5 and make a new wave 5 high. Other than that, you could look at this as just some sort of a bounce. And those of you that are familiar with what we do here at Elliott Wave Options probably would be already on top of this and wondering, do we have the makings potentially of a downward zigzag? And it is qualifying. 50% corrective move back to the upside on today's move with that move lower. And look where that would bring us if the zigzag continues lower, right to that previous 4. So again, it's not all clear. We have to see if we can continue higher. On the DIA, if you're a fan of trading the diamonds, you want to see a break above 350. That's what you're looking for there. That's the signal that you need that, all right, we're back into this consolidation area, back above what was support and is now resistance. So sitting back on top of support, and we would need to disqualify this now qualified downward zigzag. So lots to talk about, lots going on as far as the different markets. And then I'm sure everyone, you always are anyway, anxious to look at the Qs after what happened today. And so we see this move to the upside here on the Qs, just kind of in concert with the rest of the markets. Really, it wasn't that significantly higher than any of the other exchanges. You can see we had the 10, 30, and 50-day moving averages all converging at the exact same spot. Felt like something was going to happen. What happened was a little bit of a move to the upside. We're not even back to resistance yet, though, on the Qs. So, we're a lot closer on the S&P and the DIA. Still a little room there before we get back to 380, which is where and it's not a whole lot, to be honest, but with whatever resistance exists, it's right there at 380. And so, we'll see if we can break above that level. A little bit of room to go here. Want to take a look at volume. Also, a little bit above average volume. Kind of thought maybe with that NVIDIA Google news, we might see even more volume out of the Qs than that. I think that was probably what surprised me most of the day. The upward day wasn't a surprise because of all the factors that went into it. But the fact that there wasn't massive volume coming into the Qs with, adding in the NVIDIA Google news was a little surprising to me. But anyway, we got to watch 380 there. If we can get above there, we're getting close. Now, within the next couple of days, we could have a whole different tune. We could be saying resistance levels are broken. Wave 5s are on their way, and it could be a whole different scenario. We're just not there yet, but glimmer of hope for those that are along today for sure. And then let's look at the Russel. It did get a little bit of a bounce. Thought for sure we were going to come down and test this 180 level here. Haven't quite made it yet. The drill here. If you've been watching this, the 170 to 180 level had drawn in that 170 to 190 range for a while. We broke above it, tested it, moved up, came back. Looked like we were going to test it again. We got awfully close, and now we moved back up. We did clear the 10-day moving average, call it closing on the 50-day moving average here today. So with the IWM, what the level. it needs to get back above 190. So it did it once at the end of July and early August, couldn't hold it. I would try that again and see if we can get back above 190. If so, then we're likely back in that 190 to 210 range. So, there will be a point in time when the market turns to the upside before it feels like things are good. It's important to remember the market always looks ahead. We're looking 6 to 9 months ahead in the markets, and perhaps we're getting in that area where you could start looking towards when the next Fed rate cut could come. And that's going to be the catalyst to drive the market. And as I said, the market will start up before it feels better economically and with inflation as well. If the Fed stays as hawkish as they say they are, they're not going to be prompted to move on just this one report. I can tell you that is definitely not going to be enough to move them and get them to move to the upside. And then we'll take a look at the VIX. Thought you might want to take a look here at the VIX. And this would be, touch concerning, I guess, if you're long the market, that we've come down so fast off of an area where we had to be concerned with where 17 was resistance is all in 17 support. It kind of acted like it for a couple days there, broke below it, tested it again, and it's back to being resistance again. We're below the 10, 30, and 50-day moving averages and heading lower quickly. We're not very far away from 14. The VIX hasn't been able to break that 14 level or that 61.8% fib level. People ask me about that all the time as far as looking for the areas here on the VIX. Why do you put the Elliott Wave on the VIX? Because it's a chart pattern, and that's what Elliott Wave does. And the software program, Profit Source, is the best Elliott Wave software that exists on the market, in my opinion. You've heard me say this before. I've tried all the ones that I know to exist. I don't want to say I've tried them all because I don't know that for a fact, but I've tried all the ones that I know to exist. And these are by far the best. All the indicators included here with Profit Source. And while I'm talking about Profit Source, I brought this up last week. So if you want a little bit more information on it, go back and look at last week's TradeFinder. But I wanted to show you this real quick. We have an offer from the folks at Hub that make Profit Source for us here at EWO and for you guys. If you're interested, anybody can take advantage of this. Again, watch last week where I went into great detail on this. Just a reminder that this deal is ticking away. There's only 1 day and 12 hours to go. It's called Trade Like Rob. I'll ask John to put the link to access. You'll see this exact same page. It tells you everything that's included in here. Again, last week I gave you a rundown on it. You get my modules that the folks at Hub have been kind enough to add in to this program. So not only can you create your own searches, you can see what I look at every single day, hence the Trade Like Rob. And you have these pre-computed searches where there's some that are already custom made for you. You don't have to spend the time running the search. They're instant for you. You can instantly look for trade ideas. The zigzag tool, which you just saw me use on the chart of the TNX. And then we have the triangle tool, which one of my favorites. My claim to fame is triangles. It's how I kind of made my name. First book that I wrote was on that. You'll have a course on the trade scans and the technical indicators that I look at that support Elliott Wave. All that stuff is included in here, and it's over a $3,500 value that they've made available for $9.95. We said it was a limited time. We mean it. That's as long as they're going to offer it. You haven't seen this price before, and you're not going to see it again. So take advantage of it. Click that order now button, and you can take advantage of this software program and how to use it exactly the way I do, if that's of interest to you. So I know a lot of you ask, we get the question asked all the time on YouTube, what software program is that? And we got asked for it so often that I talked to the folks at Hub, and they were good enough to make this offer. So take advantage of it, and you'll get the best trading software program that exists, and all the different bells and whistles. You'll see more of them as we go through this presentation. All right, so that's the VIX. I did want to show some of the international indices as well, but I want to show you Bitcoin first because that had a day to the upside. And you can see that big move off the 26,000 level. We held 29,000 for so long, and you know, you're getting tighter and tighter. There's one of those triangles that I was just talking about. So we had a descending triangle forming. Something was going to happen on Bitcoin. Unfortunately, if you're long Bitcoin, it was a break to the downside. However, I think something that you can take some comfort in is if you, again, have been watching, even as we broke up to 29,000, I said that looks good. And let's see if we can hold here and break higher. But you always have to keep the back of your mind that this move from 26 to 29 was vertical. Now we don't have to worry about that anymore because that vertical move up has now been corrected. Here we are right back starting again at 26,000. And maybe, just maybe, if Bitcoin is going to continue higher as we move into that halving that's supposed to start first quarter next year, it can do it without being so vertical. Not off to a very good start though, because a big update today, as you can see, and as I'm sure you're aware from support resistance, really nothing matters till it gets back above 29,000 because that was support for a very long time. It's going to be resistance, but it's been a while since we had something positive to talk about with Bitcoin. We got to go all the way back to middle of June when we had that vertical move. Everything else has been sideways to down since then. So nice to have an upward day to talk about regarding Bitcoin. So let's take a look at a couple of the international indices and help if you hit the right keys. EWA here for our friends down under, and nice up day just when it was getting to the point where it was getting to scary land, breaking below that 22 level. That was nerve-wracking if you're long the Aussie. It held in there pretty well though. There was just really not much to hold it. So this is my old analogy of fingernails hanging on the edge of the cliff. That's exactly what we had going on there. And it looked to me like this was in risk of 19 and a half. It still is, unless we can get some follow through tomorrow. If we can put another day above 22 tomorrow, then start over. We're still in a wave 3 to the downside, but at least you can reset and not worry about the fact that we had broken that support. That would be reclaimed as support again. And we take a look and see where things go from that point. Looking at Canada and the EWC, you would expect with the US having such a big update that they would, they bounced off more of a area that you would expect because it's an area where several times has acted as support resistance, traded through it a bit there in March, but used it as support back in May and June, here in August, and then was a support resistance level going back to December of last year in January. So good area if it's going to bounce, which it did. And breaking that 34 level was concerning, but it held on at the last bastion of support that it had. So, you know, everybody followed suit today with what was going on in the U.S. It seemed. Let's take a look at the friends in India, see what the INDA look like, and holding in there awfully well. All we've had is a wave 4 correct to the 23.6% level. And yeah, it counts as a correction because it qualifies the pattern, and that's why the 4 is labeled. But if Elliott was here, he would be looking at that and saying that still looks pretty strong as far as a continued impulse when you bounce off just the 23.6% level. So looking awfully good there. And then the EWG, taking a look at that one, big move back to the upside there. We had looked at that as an alert and breaking up towards this 28 level. Note though that we haven't even made it past the 50-day moving average, and we're right where the wave 4 is. So it was a big up day on the EWG, but it's not out of danger land just yet. Breaking above the 10-day moving average is important. It's still in a wave 3 to the downside, but we haven't labeled the 4 yet, even though we're right there. And we want to see that 4 labeled and then a move lower if the downward move is going to continue. And if the downward move is not going to continue, then we would want to see a follow through day above 28. If it does that, then you would have to say that it looks like whatever correction was going on in the EWG is over. So a little bit of follow through above 28, and perhaps that's the end of it. Kind of found its footing in an odd place as well. So when you see those things, it makes you a little bit uneasy to say, okay, all clear, but certainly a nice move. And also in Germany on the EWG, dead on average volume. So respectful volume is the way I call it that. It's not blowout, which again would lead you to believe that you're going to pull back some, but not weak volume that would lead you to believe that, yeah, the move doesn't mean anything. It means something. The volume's solid enough that we want to keep an eye on that and see if it can continue that. So tomorrow, very important on the EWG as far as whether or not we still look for any further downside or not out of that market. So really, really interesting there. Also wanted to show you one of our recent trades that we closed. And again, this is from the search that I have, and you'd have access to it if you get the program within Profit Source. And this is on Roblox, and it was a put butterfly in our time strategy. So it's a sideways based strategy, 30% return in 18 days. So this, you call this an average butterfly. The idea here was we had this big move to the downside here. We went sideways right there around 30. And then you see that the resistance was clear there at 35, support right there at 25. It was a pretty wide butterfly. And when you have a wide butterfly, the wider the butterfly, usually the more expensive it is and the less potential return it is. I like butterflies because they are very low risk, high potential return strategy. But the wider you make it, in other words, the more room you give it to stay within your wings or the trading ranges, which is what you want. Obviously, if you have a greater chance it's going to stay there, you're not going to generate as high of a return. So to be able to put on a butterfly that big, a 10-point wide butterfly on a $30 stock or $25 stock for $2, you're going to take advantage of that every time. And it worked out really well. And so you can see that we did drift down a little bit, hence having the benefit of the wide wings, still stayed above that lower level, moved back up. Now, perhaps got out a little bit early. If that happens, then we can say that, hindsight's 2020, money quarterback. You had a nice move to the upside. Don't you think you should have waited just a little bit longer? But when you can generate that kind of return out of a wide trade, a wide butterfly, the stock was moving lower, and I'm just not fully in concert with this move that occurred today. I could look back at this tomorrow and say, yep, should have waited, got out a little bit too soon. But if we get the follow through tomorrow, likely the stock moves up, but we'll see, because support is down at 25 and it was going down there and it never made it and it bounced back up. So I took the opportunity on the bounce back up to go ahead and take the gain. And by the way, if you're interested, being an alert subscriber at evotrader.com, every one of the alerts that we send out has a screen just like this. Every trade has all of this information on it, the charts that I showed you, all the particulars of what the strategy is, the contract strikes, everything is detailed there on the website for each and every alert that goes out. So if this market is confusing you, you can become an alert subscriber at evotrader.com and join us as we go through what certainly seems like it's going to be a rocky move towards the end of the year for sure, I would think. Going back and looking at our previous case study considerations that we identify here at TradeFinder, you know the difference. That's the difference between what we do here at TradeFinder. We find trade ideas, and then you are on your own to create a strategy, manage the strategy, etc. Whereas the alert servers at Evo Trader, we do that for you. We send you out alerts as you just saw the page with all the pertinent information and kind of help guide you through the position, at least the way we see it. And that can be helpful unless you feel like you've got a full handle on all the technicals and strategies, etc. So we looked at Home Depot back on August 15th, and here's where we were at 3:30. And if we look at it now, that's exactly where we are now. Now we dipped down a little bit. There's that wave forward, 29%. So didn't quite make it to 38.2. So got to kind of keep an eye on that. But we're exactly where we were when we entered. So we're down a little bit. We're right back there. And if this is going to continue the upside, if the correction is over and we're moving higher, then we'll be in great shape here. So no harm, no foul on Home Depot. You know that the SPY that we looked at last week and talked about a butterfly, and we did send that out as an alert for a butterfly down here at 420 as the midpoint. 430 is the top wing, so breaking 430 would be nice, and we didn't quite do that. But again, I'm not fully sold that this move is going to hold. Could have a totally different opinion tomorrow. But as far as, when you're looking at charts, all you can do is identify or examine, analyze the information that you have at that given moment. So if we break above it, good follow through, another good solid volume day, then we'll probably just look to close that butterfly out. Or one of the beautiful things about a butterfly is it's two spreads. So we could leave the credit spread on, which makes money on an upward move, take the debit spread off, which is the bearish part, and the stock just needs to then stay above 430 or the SPY, and then that credit butterfly, the credit half of it, would go down to zero. We'd keep all the credit, and that's a good way to adjust a butterfly. If it's not working your way, you can take half the position off because it's two spreads, the credit spread and the debit spread together. So take off the side that's not working if you can do it early enough, which it's only been a week. So yeah, we could do that. We'll determine that. It's going to depend on what the prices are, the strikes, etc. But that's always an alternative as a potential adjustment. And if it doesn't look good, then you just take the position off and move on. Hasn't been that long, so it wouldn't be that significant of a loss. And then you just continue and move on. So we'll leave that for now, even though this is in danger of either an adjustment or being closed as a loser. But we haven't had many of them. If you go back and look at all the TradeFinders over the years that we've been doing this, you'll see that the record is pretty darn good. And we've been using the software to find them each and every time. And that's exactly what we're going to do right now. We're going to see if we can find a case study consideration for tonight. I would imagine that we have some, well, there's only one. With the move today to the upside, I thought we might see more. And these are my searches that I mentioned to you are included in with it. These ones that say EWO, those are my parameters. And they've agreed to include those in there. With this program, which normally you only get if you're an alert subscriber and have the program. So let's see. Every now and then I get a chuckle at these stock symbols. So the company is Gibraltar Industries and the symbol is rock. Gotta love it. I mean, I like to keep a little humor. Trading is difficult enough. It's stressful enough. And it can be hurt. It can hurt at times. It can be exhilarating at times. But you got to keep a sense of humor, I think, or you'll drive yourself insane. So that looks pretty interesting because it is trying to break above resistance. I think that might be a new closing high. I see the close there was 74.13. The close of the day, yeah, barely a new closing high. Let's take a look at. We were in a wave 3. And don't like the gap. That's a negative. And we kind of came back down, but we didn't fill the gap. So you got to keep that in mind. Look at that CCI. You can see that turning up nicely. Now look at the difference in the volume here on this stock versus the volume that we had in the market, where we just had average volume, 2 consecutive above average days. Money is moving into this. So I'd want to see the CMF as well here to see if we have confirmations. Let's take these indicators off, add the CMF on. Yeah, see a confirmation there. which you'd expect with a closing near the high. So all that looks good. The ADX had come up to 40 and broken down. That would have been a signal to get out, but now it's turning back up, and it looks like the positive directional indicator is trying to break above the ADX. That needs to happen. I don't think there's a huge move left here because we already had the strong part of the move right through here where the ADX went, above 20. All this stuff is in the trade scan stuff, by the way, that's included with that software I told you about. So we have the positive directional indicator going vertically up, negative going down, great separation, the ADX moving up, breaking above 20. It's as good as it gets. And you can see what happened. It basically forecasts that big gap up move that occurred there. So once it's already done that and we're coming for round two, I'm always a little suspect of that because oftentimes the next move, it doesn't mean it can't go make new highs, but oftentimes the next move is not as strong as the previous one. So you have to be a little more cautious on when we might look to see a reversal. So I'm going to list this one because it was a search result, but I'm going to put a couple caveats on this. So it's not just all clear, let's do this one. There's going to be two things that need to happen tomorrow. One of them is it needs to look like it's going to close above 75. So I'm making notes here. As you know, I'm old school. I still handwrite stuff down for two reasons. One, I'm not as good on fancy spreadsheets as other people are, but I also find that writing things down helps me remember it. So that you taught that in school. And so close there above 75, and you also want to see the positive directional indicator moving above the ADX. So if those two things occur in tomorrow's trade, then I think we've got one that could run up and hit that wave 5 target above 80. So we could see at least 80, 85 out of this one, which would be a pretty nice move. So those two things need to occur. So ROCK, close above 75, or if it looks like it, before the close, put the trade on before the close, and that move up would almost certainly mean it's really kind of right there now, but almost certainly mean that the positive directional indicator is getting above that ADX. We need that so that we know that there's enough room to move because the ADX can kind of hang in there. But if the positive directional indicator is coming down, that's early sign of waning strength. Those two indicators, the positive and negative directional indicators, are more receptive to intraday movements or daily movements than the ADX. Again, the ADX is slightly lagging. So you get a signal from those sooner. So if that was going down, we wouldn't even be looking at this. But the fact that it's going back up, there's a good opportunity for what we just talked about to occur. So with all those things, then we could very well have that scenario play out, which I think would be great. So if we want to bring it back over to you, John, I know it's a little early, but when we've closed out so many case study considerations that we've looked at in the past that we haven't had a whole lot to look at. I'm going to hang on. I'm going to tease you and put you on hold just for a second. Let's go ahead and look at a few symbols that I think people want to look at anyway, and then we'll open it up to the Q&A. I do want to look at SLV and see how we're looking with that big move down in rates. Yeah, that's what you would have expected to see occur today. So that's looking awfully interesting now. And look, we're about, we have triggered on the DMI. So confirmation, that breakout, we had the gap up, we consolidated for a few days here, and now we're getting confirmation out of the DMI. Certainly looks like SLV wants to move higher from here. It's not in a 5-wave pattern. So perhaps this is a new impulse pattern being formed. We'll be able to find that out when it labels. It looks like it's bounding out of a flat to me. So rather than a zigzag pattern, flats are sideways. There's still 3 waves, but they're sideways, not directionally based. And perhaps we're breaking from that and moving into an impulse. If you wanted to be really, really cautious, I can always try to give both sides. If everybody's different, everybody has their own risk tolerances. Some are cautious, some are more aggressive. If you're aggressive, by looking at the confirmation on the DMI, you can say, all right, I think it's going to break above 23. The DMI is suggesting that that has a high probability of occurring. If you're a little more cautious, you'd be saying, I want to see it first. You'd be Missouri, show me, let it get above 23, then I'm in. So depends on how cautious or aggressive you are in your own trading style. And, there's the trading range that it's been in. So yeah, it's had a nice move, but we're just coming off the lower end of the trading range. And that's why I'm saying, if you want to be a little more cautious, let it show us it can break out first. Or an aggressive look is saying, hey, that DMI looks pretty darn strong. I think it is going to break above there. And then if that's your view, if it doesn't, if it hits its head on 23 and comes back down, that's your stop. And you use that and you get out. I don't know that you'd want to flip this to a bearish or short position, because it's just the range is kind of tight there, just between 21 and 23. And then in honor of Zach and the winds that he's dealing with in Florida, let's take a look at NVIDIA with that move to the upside. And you look at it and say, well, that doesn't look so fantastic. Well, it's a new closing high. It didn't take out the high that occurred back here on the 24th of August. But remember, it opened at the high and closed at the low that day, that's not what you want when you're trying to break above the previous wave 3. Different scenario today. Today, we closed above that wave 3 in a new closing high, and about to get confirmation here out of the DMI. If you had I was going to say, if you had a magnifying glass, which there is one, but saving time here, just let's see if we're getting any follow through out of NVIDIA tomorrow. And if we are, that ADX likely does break above the negative directional indicator. We've been talking about the wave 5 showing us 580 for quite some time, going all the way back to the wave 3. And we did have a wave 4 correction, just the 23% one. So we want to keep an eye on the strength of this move. But it does look like at some point, NVIDIA is going to hit that 580 level. It could have been near the end of the year after today. Perhaps that's sooner rather than later. And let's just take a look at Google, since they were involved with the news today. Pretty nice move here, hitting that tap box, which is in the software program, time and price projection. That's how these forecasts are viewed. Almost the exact same DMI, except for the fact that the ADX has broken above the negative directional indicator here. Hasn't broken above 20 yet, though. It needs to do that as well. So the ADX needs just a touch more work here. So if both of these stocks, if both Google and NVIDIA can have follow through tomorrow with what happened today, hard to imagine the market correcting more with NVIDIA and Google moving to the upside. So, we're just right on the cusp here of being able to say, hey, maybe this rally has legs. Maybe the data is going to come in as weak as the JOLTs report is, and cause the Fed to realize they've done enough. Stop, no more rate hikes. Right now, or before today, I actually didn't look at it before we came on, but before today, it was a 50-50 chance in the Fed fund futures of the Fed going at the November meeting. So, that's a ways away. And now we're talking about data at the end of August that looked pretty weak. So perhaps that goes away. I imagine it's under 50% now. I'm pretty sure that would be right, but I'll check it before Friday's update and the live show that we do on Fridays. But hitting that tap box target there, bounced off a little bit, and I don't think that's the end of it. We're probably going to the midpoint of it here, which would be around 140 on Google, and then we'd have to readjust. So anyway, I did end up using all the time, John, but I figured those three were probably on people's minds anyway. So I might as well just go ahead and take a look at them. All that stuff was newsworthy today anyway. So now, won't tease you this time. Ready for you to bring up any questions that the folks might have.
No worries. Thanks, Rob. Yeah, you hit all the big ones. And before I go into the questions, I just wanted to remind everybody, if you're watching on YouTube particularly, make sure you hit that like button for Rob and help us get the channel up to 40,000 subscribers. Most appreciated. So, Rob, when it comes to questions, the first one off the list was from Rajiv, and he was asking if you could take a look at MELI, M-E-L-I.
Yep, that's one that I used to trade a lot. Mercado Libre, it's a really, or was in the past, volatile stock. You can see where it trades in 1300, but if you go back in time, it was just insane how the stock would move. So it was a fun one to trade. I've gotten away from it in recent times, but it kind of, after all that volatility, went into a bit of a trading range for, as you can see, pretty much the whole year. And nice move to the upside today. Probably saw that. Again, look at volume, well above average volume. And you can see we had a little bit of a bounce here the previous 2 days, but it was on nothing. And so you couldn't put any kind of faith in that move, but different scenario today. I look at this one though, and with the fact that it's been in the trading range for so long, I would want to see, because it has the potential of breaking out. It's another one that was headed down to its previous wave 4 target because it didn't go past 100%, and it didn't make it, and back to the upside here. These bounces, they look great today. I still think we have to look at them with caution. As I said, within the next couple of days, it could have a totally different support metrics behind it. But I would want to see MELI break 1360. That one I would want to see occur because this trading range has just been going on for so long, and it's come up this high numerous times and only to turn and head back lower. So for me, it's got to get above there. When it hit the wave 5 high, it only did it for 1 day and no follow through, and came back down, settled into the range. So it's so close on this stock. Solid volume, suggestive of a continued move to the upside. The ADX did kind of pay attention. See, that's the difference there. When I was talking about the S&P had ticked up, but the ADX hadn't. See that little tick up in the ADX on MELI? That's what you want. You want a sign that, hey, there was some strength behind that. So that's the difference. So good on you for asking about this one, both from the fact that you could have a great trade because you got a couple 100 points run to the upside if it can break above 1360. I just would want to see that first. But yeah, that's been a fun one over the years for me. Brings back good memories.
Thanks, Rob. And the next one is Lennar Corporation from Will, who's watching on YouTube. LEN is the code. Yeah.
Yeah, let's see how the housing market is doing now. And it seemed like we were finally starting to get a little bit of a dent into it. This last move here was pretty darn impressive. And as we've talked about, I've lamented about the housing market enough times, listened to the CEOs, what's going on. People aren't, the existing homes aren't moving like they were because people, whether they want to upsize or downsize, usually when you sell your home, you're either moving, well, then you have to sell, but you're either upsizing or downsizing if you're getting into retirement years, whatever. But people weren't doing either of those because nobody wanted to get rid of their 3% mortgage to go to a 8% mortgage. And so nobody was selling existing homes, so they're building new homes. And at least where I live in Florida, it's not the single family homes that are being built. And we've been hearing this from the home builder CEOs as well, that it's multifamily homes because of the lack of supply, which is what's kept the home building industry going. They're building, apartments and condo buildings now. So they're building bunches of them at once instead of one individual home at a time. There's still 1 or 2 tract lands that have single family homes on them where I live, which is an area of a lot of growth. But mostly, there's several big, massive apartment complexes going up. But anyway, that's been keeping them afloat, and they probably got a little bit of a bid out of rates dropping. If you start to see rates dropping and you start to see a further demand for single family homes again, that could give the home builders another boost. It was kind of regulating the market to one area, multifamily homes, but if rates start to come back down, that could change everything. That wave 4 could be good right there. It's right at a support level, and we could continue higher. But note that we only hit the 10-day moving average on the high, so it's not, let's not jump in yet. And on this one, even if you're looking as a more aggressive, I just feel like that was an ugly day down there. Okay, we had a little bit of news from rates today. I would want to see Lennar break back above the 50-day moving average and feel comfortable that this 38.2% fib level on the way forward was going to hold. Again, it is at an area of support and it's a fib level, so it's got the potential, but I would just want to be a little cautious. Let's get above 120 and then perhaps maybe we're off and running again. Who knows?
Thanks, Rob. Just laughing. Floyd's Garage is saying in the chat that he fat fingered Melly when it was over 2,000 and bought 100 shares by mistake. So,
yikes.
all right. So,
ouchie.
Yeah. Our next question is a question on gold. I think you already touched on silver, and I apologize. Did you already touch on gold?
I didn't. We might as well. I should have probably when I looked at silver.
I know I should have been paying attention, but I was busy telling people in the chat that your Australian nickname would be Robbo. You got to do the important stuff.
Oh yeah, you guys with your nicknames, with your Bondi and the I's at the ends and the O's and stuff, and the Z's for Z, everything, all your interesting vocabulary things that you have down under there. But looking at GLD, so we had a wave 5 that looks pretty complete there. It's a different chart, obviously, from the SLV, and we kind of had moved into looking at SLV more than GLD because it had been a more bullish chart, at least when the market had been moving up. Silver's in electronics, etc. But gold that looks really solid to me, coming off an area of support, a wave 5 that was at a good solid fib level. And if we can break above 180 once again, just because of one day above the 50-day moving average, I don't think it's all clear. But if rates just don't go rocketing up, the main thing is the dollar starts to reverse, which it could. Yeah, I think we get a further bid underneath the metals. But let's see if we get follow through tomorrow above 180, and then we probably see 185 and then reevaluate then. So I'd want to see the close tomorrow, but looks like a pattern that could be set up for some follow through.
Thanks, Rob. Yeah, that question was from Young, who's watching on Zoom. The next question is another one from YouTube. Lisa was asking if you could take a quick look at TLT. I know you already looked at TNX, but just a quick look at the 20-year, please.
Sure, might as well go over there, and as you would expect with what happened on the TNX, the 20-year followed suit. There's a lot of people that look at TBT, TLT, the inverse of each other, because the shorter end with the with the 10-year, the longer end with the 30-year. What is changed over recent times has been the inversion of the yield curve for so long. Has caused us as well to start looking more towards the shorter end, because I would usually always look at either TBT or TLT because it was just a good midpoint, gave you a good feel of the bond market as a whole. Yeah, the inverted yield curve, it was causing that issue. Yeah, big move up. So prices up, yields down. That's what happened today, and we got a ways to go. That's a good start. Little bit of a V bottom there. There used to be an expression that V bottoms never hold, but nothing goes 100%. Some of them have. So, I don't really put too much weight in, beware of V bottoms. There was a lot of people teaching that when I was first learning to trade, that V bottoms don't hold, but too many of them have, and so people don't really talk about that so much anymore. Funny how that works, isn't it? But yeah, it was an interesting day in the bond market, but we need some follow through. And if we can get TLT above the 50-day moving average there at 98, then you're probably clear up to maybe 101, and then we'll see, because it's still in a qualified downward 5-wave Elliott wave pattern. This could just be the wave 4 bounce. So still a little caution, but I think there's a trade there if we get up to that 50-day moving average.
All right. The next one I'm going to give you is a question from Randy. He's a fellow Floridian waiting out the storm. And this one, I just will preface, it's a little bit of, I think, an educational opportunity more than anything else. So he's looking at the SPX S, which is the ETF. And the question is, he's asking, would buying a $13 put against his $13 call be a good way to protect his position? And I know you'll have an opinion on this as far as whether a straddle like that is going to make the most sense, assuming that they're both at the same expiration date, and what would be maybe an alternative way to put some protection in.
Yeah, so interesting here. I'm going to urge some caution, and as John probably already thought. First of all, Randy, my thoughts with you. Being in Florida, I hope you're not in the path of the storm, because this does look like a pretty ugly one. Quick anecdote, real quick. I remember as a youngster being in my backyard in Florida, helping my dad batten down the hatches when a hurricane was coming, and I was so infatuated with storms, and I was like, it's going to be so cool if this hurricane comes this way and all this. And my dad just looked at me and he said, son, one day when you have stuff, you're not going to feel the same way. And he's 100% right. As you get older, the fascination might still be there, but you don't want them to go somewhere else, because the damage can be brutal. But looking at this and the idea of a straddle, I do prefer strangles. And especially when you're looking at something like this, because this is one of those 3 times ETFs. And in order to get that leverage, they use futures. So you're getting a double whammy on time decay. So if you have on 2 at the money strikes, then you're paying the most time premium that you could pay basically for any like type of a scenario. So depending on, I would have to know where you got in on, where the stock was when you got in on your call. But if you take a look at maybe more of a 25 to 30 delta on the put, you could have some acceleration there. Delta and gamma, other 2 things that cause options to accelerate. On top of that, you're not paying as much time premium, which is a real concern in these. People just need to be real careful. Yeah, they can be really fun when you get them right. If you get them right on direction and the timing, yeah, I mean, when you get a 3 multiple on what that underlying security is doing, that's a lot of fun. But if it takes time, then the time decay eats you up. So I would look more out of the money on the put side. Yeah, I think that could be a good way to protect. I don't think that's such a bad idea, because I feel like the market is primed to do something significant, whether it is take off and rally again or roll over and head back down towards at least 420 on the SPY. So yeah, I would go more strangle side than straddle, especially on one of these that are backed by futures contracts.
Thanks, Rob. Getting close to the hour, so maybe we'll fit a couple more in here. Does that work for you?
Yep, let's do 2 more.
All right. So the next one is going to be from Trisha. She has asked for a couple, but I'll start by giving you JWN.
Nordstrom, doing the high-end retailer, which, as you can see, hasn't been such a good place to be here lately. I will say, if it's going to hold, this is where it's going to hold, because this is the support. We're right here at the massive amount of support. We had the wave 5 in. We went back to the previous 4. We did a little ascending triangle there, broke out, retraced it, which you usually do, and then just kind of came vertically down from there. So this one's fairly easy. If you wanted to take a speculative shot at this one, it's oversold. It's well below the 10-day moving average. It's sitting on top of support. If it doesn't hold here, then it's without Zach, it's Katie bar the door time here. If it can't hold 15, then who knows where it finds footing. So it needs to try to hold here. I don't know what the institutional ownership is in it right now, but they're not going to want to see it break that, because they can look at charts just the way I can. With that fairly vertical move, if the market does settle in, you could get a tradable bounce here. I wouldn't say that it'd be off to the races by any way, shape, or form, but you could possibly get a tradable bounce off support back to the 10-day moving average and possibly even fill in that gap. So, perhaps an oversold bounce here off of support, but if it breaks that 15, that's your stop and out immediately. And then look at that one, you would look at possibly going short on, because there's nothing below there. All right, one more.
All right, the last one I'm going to give you is coin. There's a few people both on the different platforms that we're looking at talking about what's been happening in the crypto space.
Yep, that's a good one. I should have brought that one up anyway. I've been kind of tagging that one along with Bitcoin lately, because a lot of people have been looking at this ever since they got past all the regulatory stuff that was giving them trouble. But then with Bitcoin breaking down, so did coin. I had said in previous webinars that I thought, if you got to 80, that would be a pretty good entry. It did break a little bit below there. It managed to come down here towards 70. Where there was even more support. So, when you're up here at 110, 80 was looking like a great entry, but 70 would have been a little bit better, obviously. But that big move above all the major moving averages, breaking above 80, all that stuff is huge. But you know what I'm going to say next? We got to see follow through, confirmation, big volume there, almost too big of a spike, but not quite. So if Bitcoin can get some follow through, I think Coinbase does too. And yeah, I think you got a lot of room to run here. I just would want to see follow through tomorrow. And if so, yeah, I think it's if you're not in Coinbase, I think it's time to take a look at it. It's come down. It's held its important level of support that it needed to. Still technically in a 5-wave to the upside pattern. Not a bad wave 4 there, just below the 61.8% fib level on a ton of support. Yeah, so with some follow through here, I think Coinbase looks really good. Thanks everybody, as always, for spending some of your evening with us. Time's the most valuable asset we all have. Again, thoughts and prayers with the folks in Florida and anywhere else that storm may go, not just Florida. But thanks for your attention. Have a great rest of your week. Look forward to talking to you again soon. Take care, everybody.